say, okay, I have a lot of money, but you have no money unless you take profits.
When the first ever spot ETF was created for gold 10x.
And the only thing I really knew was Bitcoin at the time, so I just invested very heavily into that. Rode it all the way up.
What's up?
My name is Jeff. Even the creators have said it's going to be the predecessor of CBDC.
What that taught me was that I need to be self-sufficient.
A solid DCA investment strategy, and pretend the red sell button doesn't even exist.
We about to go up like.
Welcome, ladies and gentlemen, to the Q1 of 2024 Thesis Show. We are very excited to present this one to the community. We are hoping that this is the first in a long line of Thesis shows to come. The goal here is we have all put our collective heads together to determine what we think is going to happen in the little crystal ball that is crypto, macroeconomics, the world at large, and let you know what major events are coming down the pipeline. With that said, I am joined by my co-host for the evening, Josh, or better known as Chocolatey Tanks. How you doing, brother?
What's going on, man? Hey, a lot of good football on this weekend. Had a good time last night. I did my own little celebrating for our boy, Mr. Anonymous being crypto over here. I'm not going to put any information out if he wants to, but I was doing a little celebrating myself. So, but yeah, everything's good, man. Excited about the episode. Excited for what we got coming around the corner. And yeah, this is going to be great.
Fantastic. Go ahead and let the folks at home know what topics are you our subject matter expert on tonight.
Yeah, so I'm going to be discussing the pretty much the macro markets, everything except cryptocurrency. So I'm going to be discussing real estate, global market, equities, and commodities. Just, short summarization of each of those, what we're going to expect in Q1 of 2024. So that's going to be my portion, and I'm ready to rock and roll on it.
Fantastic. With that said, we're going to turn it over to the first of the panel. We have Brendan, otherwise known as an anonymous bean on X. How you doing, man?
What is up? How's it going, Zenith? Super stoked about this episode tonight.
Me too. This is going to be a fun one. You and I actually had a little collaboration on our topic. So what are we going to be covering together?
Yeah, so we got some really good stuff going on essentially this week, but we're going to be talking about U.S. government, regulatory analysis. There's some big legal proceedings out there. Someone's decided to fight the corrupt SEC, and I hope he brings some warmth to our hearts this coming crypto cycle. And those are going to be huge topics that we're going to cover.
Fantastic. Looking forward to it. We have our second panelist tonight. We have Will Stevenson, otherwise known as our IRL meetup expert. He's the person you're most likely to see in real life. The rest of us we're all AI. Let's be real.
Aloha, amigos. How's it going? I'm glad to be a part of this Q1 Thesis team. I wasn't really thinking much that meetups would be a part of like what goes on in the crypto space until, I did this DGen Roundtable thing and went around the world and around the States really and just met people. So happy to be here, ready to do some stuff. Let's get after it.
Fantastic. And then we have last but not least, and I'd argue the person who did the most work on the actual physical documentation themselves. I can tell that this man has done some technical lab reports in the past. And that is none other than our very own Agent J, our TA specialist. How you doing, man?
I'm doing good, brother. And you already basically said it. I'll be doing TA like usual. That's about it.
It's not just doing TA, but rocking TA out of the house. By the way, it is great to see you again, brother. We're happy to hear that you're healthy and back on stream with us.
Yeah, man. COVID hits like a truck, no matter how many times you get it. So I am thankfully fully recovered. Still a little scratch in my throat, but otherwise no fever, no more body aches. I'm back in the gym. I'm back home from Oregon. And starting January, didn't exactly start January off in the best foot, but we're gonna keep it rolling from here on.
Perfect. All right, glad to hear it. We are all very excited for the episode. I'm going to give you a quick rundown of what you can expect tonight. So we're going to go one by one through each of our topics. We'll have our subject matter expert present, and then the rest of us are going to try to share some insights and maybe bounce a little conversation back and forth. But then other than that, I'm going to go ahead and kick us off with a little bit of a executive summary. The general consensus from what I've gathered after compiling all this information together is that quarter one of 2024 is going to be a telltale sign for the rest of the year. What I mean by that is there's major events happening later in the year, and then we're going to start to see indicators of what's to come in quarter one. Specifically, in the crypto markets, we have the halving occurring in April of 2024. Typically, in the past, we've seen run-ups to the halving. However, one of the big discussions this year is whether or not that has been factored into the markets. Our time through the end of March is going to determine whether that is and where we go from there. However, the general consensus is it's probably going to be slightly up, but there's going to be a lot of chop along the way. So opportunities to maybe DCA in if you haven't been doing so consistently. However, there's good news there. As far as the macro side, it's honestly a lot more things to come. One of the things that we've noticed is that the U.S. has been trying to put off recession for a long time. There are now indicators that the Fed is going to be reducing interest rates, and this is going to be one of the large things we're talking about tonight, which is that interest rates in the U.S. affect global markets because American GDP is by far the largest in the world. Therefore, it's going to have cascading effects down the line. And then lastly, there are major events happening in this first quarter, notably in the crypto legal space and also in the political legal space. We have Richard Hart taking on the SEC. We have fallout from two major court cases of last year that have the sentencing still to come. Of course, I'm talking about none other than FTX's own Sam Bankman-Fried and Binance's CZ. And then lastly, one of the big things kicking off this year is that this is the start of an election year. Therefore, we can expect a good bit of turbulence, especially considering that Donald Trump is going to have two court cases by the end of quarter one and a third starting early in quarter two. With that said, I'm going to turn this over to our TA specialist, Jay, who's going to talk us through the Bitcoin charts first, and we're going to cascade into other coins after that. Jay,
Yep.
Take it from here, brother.
Yeah. So here's the thing, guys. If please feel free, both the panel and the chat, to jump in with any questions you might have. Otherwise, I am going to keep talking, and this section might take on longer than anybody else wants. So please feel free to break up the monotony of the charts and the TA speakers, because otherwise, I'm just going to keep rolling.
Jay, I got to jump in, buddy. I just want to say it's been a while since we've had you give TA on stream, and we missed you. We're so happy to have you back, and I could just know that you're chomping at the bit. You got a lot of stuff to share, and I'm excited to see it.
Yeah, man. Yeah,
you know what's interesting? What's interesting? Jay comes back from being sick. We got a QR code up on the screen now. We got the DJ and Roundtable globe down in the bottom left of the corner now. We got everything all changed up. So yeah, man, welcome back. I'm glad to have you back on, bro.
Yes, sir. It's certainly. I'm very glad to be back because, you know, they say that a little bit of distance makes the heart grow fonder, and the time off during the holidays definitely, like Brendan pointed out, had me chomping at the bit to jump back here on stream, because I know you guys have been extremely active over the holidays. You know, with the Hex conference, with everything that you guys have been doing in the background for the channel. So I am very excited to be back on and to be able to provide the people, our community, with as much value as possible, because 2024 is going to be quite the ride. So without further ado, let's get right into it. I'm going to go ahead and share with you guys my Bitcoin chart. I'm going to do things a little bit differently here. I'm going to kind of stair step into each indicator that I have been tracking over the past few months, just to keep myself a little bit organized. Because this is the Q1 Thesis stream, I want to be able to present this information as clearly and as concisely as I can for the folks at home. And for anybody interested, there will be I believe Zenith is basically going to be compiling either a Word or a PDF document that our members and our viewers are going to be able to download so that they can go through this. Well, it's going to be quite a bit of information on their own time if they'd like to kind of look back and go over it themselves. So let me go ahead and get things started off here. I'm going to share my Bitcoin screen. Give me 1 second. Okay, let me know if you guys see this right here.
Yep, got it up, buddy.
Okay, wonderful. So, Q1, what can we expect from Bitcoin? I was thinking of actually doing this with Ethereum as well, But if I went on anything else besides Bitcoin, I feel like this section is going to drag on a lot longer than it should. So we're gonna go over Bitcoin, and then if time permits and the audience wants it and the panel wants to discuss other coins, I'm gonna go ahead and go over other coins. But for right now, we're just gonna stick to Bitcoin. So we just actually had our daily candle close just a few hours ago, and so we're currently on day 35 of the 60-day cycle. Now, here's the thing. I was expecting this wave 5 impulse to be a little bit more bullish because we got the overwhelming, well, actually not overwhelming. We had, I think, every single one of the ETF applications approved last Wednesday. Now, if you guys have been following up with the news, you know that there was a lot of speculation that it was only going to be a handful of ETFs that were going to be approved by the SEC. But that's not what Mr. Gensler gave the market. He actually approved every single one of the ETFs that have been on the back burner. It's actually, I actually found it pretty funny because when it came, so there's a panel of 5 when it came to the decision making whether to approve the ETFs or not, and it came down to a split vote, 2 votes for and 2 votes against the approval of the ETFs. And lo and behold, the person who had to actually throw his hat into the ring for Bitcoin was none other than our favorite SEC commissioner, chair Gary Gensler. So thank you, Gary. Appreciate you approving the ETFs there for us. But so I just actually thought that was pretty freaking hilarious. So I thought that the wave 5 impulse of our, so this is the start of the macro wave 3, right? And we are currently in the wave 1 of 5 of the macro wave 3. I thought that this last leg of the impulse was going to go a little bit higher. My expectation is that we were going to hit resistance somewhere around $50,000 Bitcoin. However, we got rejected a little bit earlier, and I believe we peaked out at about 49,000. Let me see what this candle is telling us here. Yeah, the high for this candle was $49,048 for Bitcoin, and we actually started to stair step down into the bottom of the Bollinger Bands here, as you can see. Now, here's the thing. This is a right translated cycle, right? By my count, this is a, I know other people, I believe Zenith and even Boogie have different counts than I do, but I have my current count at day 31 of the cycle. And this is a right translated cycle. And usually what we can expect during right translated cycles is that Bitcoin is going to keep searching for new highs anywhere between like 10 to 20 days after day 30. Now, we are currently on day 35, and it seems like Bitcoin is wanting to head down into lower prices. As usual, I'm going to give you folks both the bearish and the bullish case for Bitcoin heading into the rest of January and what we might be able to expect heading into February and March. But because it seems like Bitcoin is wanting to go on the downside, right? It's trying to look for a cycle low currently is what it seems like to me. We're going to go over some downside targets first. So give me 1 second. The first thing that I want to bring to your attention is our horizontal support levels, right? If Bitcoin was to keep heading downwards and look for a new cycle low, what are some prices that we can expect? Well, firstly, I want to bring your attention over here to this purple rectangular box that I have drawn in. Now, I believe that at the very lowest, right? I think that we can expect, no, well, not at the very lowest. I think we can expect for Bitcoin, if it was to keep heading down, to find the bottom range of this horizontal purple box, which is around $40,000. Now, what is one of the reasons why I say $40,000? Well, if you can see here, we have a cycle low here that came in at around the second week of December last year. And what do we always say over here when we're doing RTA? Anytime that a past support or resistance level has been broken, if price was to either go up or go back down to that area, you can expect that that price area is going to serve as some level of support. Now, why do I say, if you guys are in the Telegram chat, I have been pretty adamant about saying that it's very unlikely that Bitcoin is going to spend a significant amount of time below $40,000. I'm not saying it's impossible, right? But I am more thinking that the next few months, right, of Q1 is going to be a lot more of crabby sideways action than significant downside. And the reason for that being is that if you go a little bit further back into Bitcoin's chart, right, there's a specific reason why I have this area highlighted here in purple. If you take a look over here, right, let's go over into the weekly chart. That way you could just see it a little bit better. Okay, so here is that entire purple box highlighted for you, right, on the weekly chart. You can see here that we have a chunk of price action here, right? This was at the tail end of the last bull market, where we have a considerable amount of cycle highs, right, and cycle lows for Bitcoin within this price range of $40,000. And I believe the top band here is about $45,000, right? And so because we have such a thick band of support here around that price level, it doesn't seem very likely to me that if Bitcoin were to drop further down, that we are going to get too much price action below that $40,000 area. Now, is it impossible? No. Improbable for me personally, I don't think so. But it's certainly, if we have a lot more bearish news over the next few months, it certainly is possible. But like I mentioned earlier, and this is going to make it a little bit more clear as we go over the other indicators, you're going to realize that there is also quite a bit of confluence around this $40,000 area for Bitcoin. Okay, now what is the next variable that I want to go over here with you guys when it comes to potentially looking for a low to the downside, right? Well, if we take a fib retracement, all right, so let's take our fib retracement tool here and take it from our bear market lows to our current swing high, which is around that $49,000 area. Oh, sorry, that is not our bear market. Oh, sorry. Give me 1 second. That is not where I wanted to go. I wanted to go from the beginning of our impulse, not from our bear market lows. That is incorrect. Here we go. If we take a fib retracement from the very beginning of this impulse, I just want to refresh your guys' memory. Like I mentioned earlier, we are in the wave 1 of our current macro wave 3, right? So this is the wave 1 of our macro wave 3. So if we take a fib retracement from the bottom or from the start of that impulse to the very top at our $49,000 high, you can see that this 0.382 level is right around $40,000 in price. And so we have a ton of confluence around this area telling me that if Bitcoin was to keep heading down, that $40,000 area is going to serve as pretty damn strong support. Now, obviously, $40,000 is also a psychological number, right? People like whole numbers. So that $40,000 area is also going to serve as some kind of psychological support for Bitcoin, right? And so there is quite a bit of data that's telling me that if we were going to head lower, that the bears are going to have one hell of a time trying to break through this price over here. You can also see here. Check this out. This long-term trend line that we have formed since the beginning of the bull market, right? We started forming that at the very tail end of 2022, or right around December, right? And we have been forming that long-term trend line, and look at where price is currently at, right? You see how close price is to that long-term trend line, right? And so that's just right within this purple band of support that we have drawn here. And so here is another, right? Obviously, trend lines are fairly subjective, but I'm going to tell you right now, a lot of technical analysts, the charts that I'm seeing them draw out, we have very similar trend lines drawn out here for Bitcoin. And so if price was to come back down lower, you can expect that Bitcoin is going to interact with that trend line. And if you notice, every single time so far, right? After this wave 2 and we finally recovered and broke past that trend line once again, every single time price has come down, you see how price has interacted and bounced off of that trend line and has just been scooped back up every single time, right? And so I expect the same thing to happen again, not just because it's happened all the prior times it's made its way down there, but like we mentioned earlier, we have quite a bit of confluence of support around that $40,000 area. Okay. So, however, it's certainly possible that if we get more bearish, that we are potentially going to see a little prices below $40,000, right? I don't expect Bitcoin to go any lower than this. Oh, I moved my fib retracement. Give me 1 second. Let me fix that. There we go. I don't expect Bitcoin to go any lower than $35,000. And I mentioned this in the chat. I believe it was yesterday. I said I went on record to say that we are not going to see Bitcoin below $35,000 probably until the next bear market, right? And so I know some people might be asking who look at Elliott waves. They're like, well, Jay, you said that this is the first, this is the wave 1 of the macro wave 3, and if you guys have been listening to me in the past, I've also said that the wave 2, right, is usually a very steep retracement, right? But if you remember when I discussed Elliott wave in detail, you also will remember that the reason why wave 2 usually drops a lot further, like for example, it would not be unreasonable for people doing an Elliott wave analysis to say, okay, we're going to head into the wave 2 of the macro wave 3. Then isn't it possible that Bitcoin can go anywhere between this 0.618 fib down to this 0.786, right? And that price range is between $30,000 and $34,000, right? That would not be an unreasonable from a traditional Elliott wave perspective, right? Because wave 2s tend to retrace a lot deeper. Now, why am I arguing against that? Well, here's the thing, right? Yes, it is true that wave 2 tends to retrace the deepest, right? Between wave 2 and 4, it is wave 2. However, if you remember, I also mentioned that the reason why the wave 2s pull back the deepest is because people in the market, right? Usually the big wave 2 comes, it's preceded by a downward sloping prevailing trend, right? And so the prevailing trend that is the freshest in people's memories are that of usually the bear market or a prevailing downwards trend line, which is why you get a significant amount of sell-off during wave 2 versus wave 4 when the impulse to the upside is a lot more defined, right? Because what precedes the wave 4? Well, your wave 3, and we know that the wave 3 is the most impulsive and the most bullish wave usually during an Elliott wave impulse, right? And so that's the reason why I don't think that we get a retracement back to this 0.618 area, is because if you notice the prevailing trend for the past almost year and a half, right, is upwards and to the right. And so the prevailing trend that's freshest in people's minds is an uptrend. And so that's another reason why I don't think that Bitcoin breaks down below the usual 0.618, 0.786 retracement that is usually characteristic of a wave 2, right? You also have to consider that where is this wave 2 occurring? Well, it's within the context of the macro wave 3. Okay? So okay. Let's move on to, okay, Jay, I kind of get where you're coming from. You don't think the Bitcoin is going to get below $34,000. Is there any other reason why? Well, here's the thing. If you take a look at had a brain fart there. The Bollinger Bands. I'm going to take you a little bit further back into Bitcoin's history. Okay. And one of the primary reasons why I don't think we see anything below $35,000 Bitcoin, if you see that the 20-week moving average, this orange band here, the 20-week moving average for Bitcoin is sitting currently at $35,580. Okay. That's going to be important. Why is that important? Well, if you go back in Bitcoin's history, let's just take the prior 4-year cycle, for example, right? So this right here is the third 4-year cycle for Bitcoin. This was year 1, and this was in January of 2019, right? You can see here, this was the wave 1, right? We're looking at the macro scale. Wave 1, 2. Look what happens once Bitcoin starts its wave 3, right? You can track the 20-week moving average right here. Did we have any weekly closes after this wave 3 impulse has started? Do we have any weekly closes below the 20-week moving average? The answer for the cycle is no. We touched it a few times, but if you notice here, once we really got going into the latter half of that wave 3 impulse, right? I don't have the 10-week moving average right now, but you can see here that the price is basically riding the top and opening up the top of those Bollinger Bands, and it did not even come close, not even close to going back down and retesting that 20-week moving average until this wave 4 here, right? Before our $69,000 all-time high, right? So Bitcoin did not retest the 20-week moving average until the wave 4, right? The macro wave 4. Let's go back another cycle. Here's something that's even more telling. Look at this, right? This was Bitcoin's second 4-year cycle, right? Take a look at this, right? So this is your wave 3 and all the way up into wave 5, right? Look what happens. Bitcoin does not even close, right? Once again, Bitcoin does not close below its 20-week moving average. Shit, this this was so bullish, right? It retested the 20-week moving average a few times, but Bitcoin did not have a close below the 20-week moving average until its bear market. Same thing here, right? We could go with the entire history of Bitcoin, right? 1, 2, once we start that wave 3 impulse, price does not go below the 20-week moving average, okay? And anybody who looks through the entire history of Bitcoin will tell you the exact same thing. And so, like I mentioned earlier, where's the 20-week moving average sitting right now? It's at $35,500. Okay? And what do I always say? Until a pattern breaks, I am going to assume that it holds. And seeing as that we have over a decade's worth of data to pull from of a pattern not breaking, I am not going to assume that we are going to close below the wave. We are not going to close below the 20-week moving average for Bitcoin because we are now currently in our wave 3, macro wave 3 impulse. Okay? And so to kind of cap off the bearish scenario for Bitcoin, I expect that if we do get lower prices, the bears are going to have a hell of a time trying to crack $40,000. And if we go below $40,000, I think the lowest we're going to go is probably this 0.5 area here of $37,000. We probably get the bears are probably going to try to push us down close to 35, but I think the bulls just scoop it back up, right? I don't think you're gonna if we do see prices below $40,000, I don't think you're not going to spend a considerable amount of time there. Okay, that was a lot, and that was just the downside targets. I'm gonna go ahead and get back to the panel here. Do you guys have any questions, comments, anything you want to add as far as downside targets are concerned for Bitcoin before I move on to the bullish case?
No downside targets. However, I am going to take a quick break so we can say hi to some of the folks in the chat. Sound good? Break it up a little bit. All right, top to bottom, here we go. We got Moonmutt saying we are going up and to the right. After that, we got Nate in the chat, not on the panel tonight, but in the chat for sure. If you got any questions, feel free to ask him in there. We got Willie B. Long. You've been showing up constantly, brothers. Always good to see you. Saying to the moon, Alice. Cassie is in here saying, hey, hey. And No Money Mike making a bold appearance here. He says he's on a date, but he can't miss the alpha. Next up, we got Chad Donnerschwanz. Says, we back, based and bullish. Good stuff, my man. And then lastly, we got 8-Bit Hex. I think he's trying to say that Hex is the color of orange right now. But this last week, I'll tell you this. Hex and any other Richard Hart product has been the color green. We're going to be covering that a little bit later after we finish up our Bitcoin discussion. But other than that, I'm going to turn it back over to Jay.
Hey, let me hop in real quick, Jay, before you continue. That was great, and I just want to reiterate one thing that you had mentioned. We have to keep an eye out for trends. Trends are really important when you're looking at market analysis, and the trend that you're talking about that hasn't been broken about dropping below the 20-week moving average once we get into a bull market. That's something that's really important, and that doesn't mean that it can't ever be broken. But until it gets broken, we need to consider it that it's going to continue. And so what Jay's trying to say is because it's continually had this pattern and it's never been broken, we should consider this to be the more probable than not outcome, rather than thinking it's going to pull back into a deeper retracement like a normal wave 3 does. And I think that this is something that we look at in crypto markets in general very often, is that, hey, what are the trends? What are we expecting to see? But we have to hold our convictions loosely, right? If it does break below that 20, does close below that 20-week moving average, then it's, hey, okay, let's pivot and see what our next scenario is and what our next consideration could be. But until it breaks below and closes below that trend line, we need to consider it as it's going to continue to prop up the price of Bitcoin in this macro wave 3, potentially more than it would normally. So good point, Jay.
Yeah, absolutely, man. And I mentioned this at the beginning of the weekend. I said, hey, you guys noticed that, obviously I think it's fairly obvious to everybody who's paying attention to the market that there has been quite a bit of market manipulation going on, even upon the release of the ETFs, right? Everything leading up to it, right? Rife with market manipulation. What happened with the SEC's Twitter? Got hacked, right? Somebody put out a statement saying that the Bitcoin ETFs were approved. Like an hour later, they said, no, we were hacked. And like, oh, fantastic. Here you are harping on people about security, about how to be careful in these markets. And then you're over here. You don't even have two-factor authentication active on your Twitter. And you're telling us that this just all happened to be a freaking coincidence, right? So everybody knows that there's quite a bit of market manipulation going on, right? It happened again after the ETFs were released. We had a big Chad candle back up and then a sell-off right after, right? But then what happens? Traditional markets close. What did we observe over the weekend, right? Bitcoin was green on Saturday, closed red on Sunday, but is now back up to the green, right? Because traditional markets still aren't open. And so what you guys have to realize is that there's going to be a lot of actors in this market now, right? Because these ETFs are live, they're going to try to take your Bitcoin away from you. They're going to try and take your crypto away from you. And they do this by painting the chart with these massive red and green candles to the upside and to the downside, right? They're trying to take their crypto away from you. But as I mentioned here in past streams, if you look at the on-chain data, the overwhelming majority of Bitcoin right now in circulation is being held by long-term holders, right? People who have not moved their damn Bitcoin anywhere between 6 months to a year. Okay, there's a reason why, even though we had that big red candle, I know people have recency bias, they get scared, but you have to consider the fact that that was barely a 10% drop for the price. And we were back exactly where we were, right? A little bit over actually, before the ETFs were approved.
I got a little bit of a comment to make real quick. It's on the same path, I guess you could say, but it's a different thought process, I guess. So over the last couple weeks, we had been discussing, once Bitcoin's price started to run up ever since September, October, we've been tracking the relative strength index and all that stuff, and we could see that Bitcoin was starting to get oversold. And then there was sort of an idea or a narrative, a possibility that started to creep into the community chat about, possibly this being a left translated cycle with how strong Bitcoin was moving so early in the cycle. And then, Bob Lucas recently came out with a tweet that said that this recent Bitcoin sell-off is actually good for the 4-year cycle narrative, because what this will do is it will allow some liquidations, and it will allow some cooling off so that we can get into the halving period, and then we can see that typical Bitcoin parabolic move once we, get into the summer of 24 or moving into the fall of 24. So just a shout out there to Bob Lucas, sort of, confirming what we had already somewhat started to discuss, where, it was looking like for a minute it could have been a left translated cycle, but seeing this drawback really supports, okay, you know what? We've seen stuff like this happen in past cycles. So the 4-year cycle narrative, the full macro right translated cycle is still looking pretty solid. So that's point number one. And then the second thing that I have is it's more of a question. So you had mentioned early on Bitcoin could get into a crab phase for this Q1 portion of time. So if Bitcoin gets into that crab phase, number one, is that typically good or bad for altcoins? And number two is, could that pave the way for a mini alt season before we lead up to the Bitcoin parabolic move going into, the summer or the fall after the halving?
Fantastic question. Yes, absolutely. If we were talking about it already earlier about the Bitcoin's 20-week moving average, in general, when Bitcoin is above its 20-week moving average, altcoins do well, right? Ethereum and other altcoins do well. They don't, if they are dumping, they don't dump quite as severely, but what have we been saying? We are in the middle of Bitcoin's macro wave 3, which means that any left translated cycle that we might get, any sell-off that we might get, is going to be short-lived. They're going to be far and few in between. Any left translated cycles that we might have, you can expect that they're probably going to be shorter, if not shorter than usual, right? And if you look at the Ethereum chart, you can see that Ethereum, even though it's been a bit slower moving to the upside compared to Bitcoin, compared to the rest of the altcoin market, what you notice is over the past few weeks, right? Every single time we've had a move from Bitcoin to the downside, Ethereum has held up a lot stronger, right? And when Ethereum holds up stronger, it also usually means that the altcoins are going to hold up stronger as well. And Ethereum right now, even though Bitcoin has dropped 10%, Ethereum is still hovering around that $2,500 area, right? So far, it seems like Ethereum is more in its way, right, to its into its macro wave 3. If you take a look at the chart, I mentioned this a few times, not just in the chats, but our past streams over the last few months, that because there's a lot less manipulation going on over the Ethereum chart, it looks a lot cleaner. And that 5-wave impulse to the upside for Ethereum on its Elliott wave pattern is so much more cleaner than Bitcoin's, right? You could pick out where the cycle highs and the cycle lows are for Ethereum a lot clearer than you can with Bitcoin. Okay, and so yes, during this crab phase, if Bitcoin was just to hover around $40,000, I actually believe that we can get a bigger, stronger move from Ethereum, and then obviously the altcoins will follow suit. I hope that answers your question, Josh.
Yeah, definitely, for sure. Good information.
Alrighty, Jay, you gave us your downside for Bitcoin. Can you talk about your upside potential?
Yes, sir.
Let's go.
Okay.
Do it.
All right, let me go ahead and go back to sharing my screen here. Give me 1 second, fellas. Here we go. Okay, so
I was just going to say, while he's loading that up, shout out to the chat. You guys are on fire tonight. Keep those comments rolling in. We really appreciate it. Yeah, Jay, hit it up, man.
Yep. Okay, so I'm going to go the same exact way that I did for our downside targets. I'm going to go over each indicator here. So we're going to go over some horizontal resistance first and foremost, right? So if we were to see some upside targets for Bitcoin, I think there's a range that I'm playing around with here. The same way that I have this purple band of support drawn out here, I think that if Bitcoin was, let's just say that the pullback is done, right? Usually we expect a 0.382 pullback on the fibs during a wave 2, right? A minimum 0.382 pullback on the fibs. Let's just say that this is an anomaly and that the pullback is done, that price has only pulled back to that 0.236 fib, right? And that we are going to continue on the upside now, right? Next week is actually going to be pretty fun to watch to see exactly where Bitcoin wants to head. But if we were going to head to the upside, the range that I'm playing around with here is somewhere between $50,000 and $5,300 for Bitcoin, right? I'm gonna draw us a horizontal band the same way that I did for our downside targets. Actually, I can just pull this up right here. Give me 1 second. Here we go. Pull it up a little bit further. There we go. That's what I wanted. Okay. And the reason why in particular I made the resistance band around this area of price is because the same way that I mentioned earlier, right? Prior cycle highs and cycle lows, once they are created and broken through, if price was to move either back up towards or back down to those prices, they tend to act as horizontal support and resistance. And so if Bitcoin was to keep going to the upside, you could see that it was already rejected here, right? Well, the top of the Bollinger Bands also rejected it, but we're going over horizontal resistance now. You can see that Bitcoin was rejected just right at just slightly above the bottom band of this horizontal resistance that I have drawn out here. And the reason why I think that $50,000 to $53,000 for price is going to be our heaviest resistance before we move the rest of the way up. The reason for that being is we have also a significant amount of price action within that band of price. And you can also see here we have a cycle high here on the 28th of March in 2022, a cycle high here on the 27th of December. This was back in 21. And then another cycle high here on September 6th of 21. Right? And so all of the cycle, these three cycle highs, along with all of the prior price action occurring between the $50,000 to $53,000 area of price, right, is going to serve as a primary resistance for price if it does decide to move back up. And so if wave two for this, so if this wave two of our macro wave three is indeed done, expect price to start heading up towards that $50,000 area. We have to break through $50,000 first, right? That's also going to serve as some kind of psychological resistance for folks, right? Because whole numbers, people like whole numbers, people like taking profits, and they like buying at whole numbers. So you can expect that $50,000 to $53,000 as your primary targets for our next move up before we start seeing a little bit of resistance, right? And like I mentioned earlier, the top of the Bollinger Bands here at 48,744 is also going to serve as some level of resistance. So let's go over and move on to our fibs. Give me 1 second here. Let me pull up my notes for our fibs. Oh, actually, before we go to our fibs, I actually want to go over, since I've been talking about Elliott Wave here. What are the, so let's do some moon math here. Well, actually, it's not moon math, but I think everybody's going to like the prices that I'm going to be talking about here. Based on the price ratios, right, for Elliott Wave, what can we expect as the potential one of the high targets we can expect this year for Bitcoin, right? Well, if we take our price tool here, we know that our wave one from start to finish topped out at around, that's about a double, right? So 100%, 101%, let's just call it 100% increase. So that's about a double. Our wave three, we know at the very minimum, right, matches the percent gain of our wave one. So if we take that same price tool, right, if we go from the very start of our wave three, let's just go 100%, right? So we've actually already hit the minimum price for a double from the start of our wave 3, which was right here at, oh, actually, no. Sorry, we have not yet. The 100% minimum, look where that lands us, right? It lands us right at $50,000 in price. So once again, right, that $50,000 area is a common occurrence, no matter what indicator you're seeing, right? We can see here that taking into consideration the Elliott wave ratios in terms of price, that the minimum amount that this wave 3 price would go up to is around $50,000. Now, what can we expect if we were going to be a little bit more bullish for Bitcoin in our Elliott wave, based on our Elliott wave ratios, right, and our price predictions? Well, if we take a fib extension, right, from the start of our wave 1 to the finish, pull it to the bottom of our wave 2, right? This is just general fib levels. We know that wave 3 can, right? A very common, oh, geez, this is why I love technical analysis, bro. We know that a very common minimum for wave 3 to hit during a wave 3 impulse is this 1.618 area on the fib retracement. And that's also a $50,000 area. That's also a $50,000, right? So you have a ton of confluence around this $50,000. Now, a very common extension for wave 3 is also here at 2.618, which is at $65,000. And if we get really bullish this year, and this hasn't happened before, Bitcoin usually does not hit a new all-time high until after the halving has occurred, right? But if we get super bullish in this wave 3 in 2024, another common area for Bitcoin to hit is this area here of between 3618 and 4236, right? These are the most common ones. Your 1618, 3618, and 4236, right? And that's between $80,000 to $90,000 in price for Bitcoin, right? And so if we get super bullish this year, right, expect Bitcoin to hit at the very minimum this $50,000 area. But our moon math for this year, I don't think it's unreasonable to say that Bitcoin can definitely make a new all-time high after the halving. And shit, man, $80,000 to $90,000 Bitcoin, I think is certainly possible. I think it's certainly possible. We don't know what the long-term effects of the ETFs are going to be. We don't know exactly how bullish price action can become right after the halving, right, which is set to occur sometime in the first, either the first week or second week of April, right? So this area here of between $80,000 to $90,000 in price is certainly possible for Bitcoin this year, right? And I think that's actually being pretty damn conservative. All right. So yeah, man, those are my price targets to the upside for Bitcoin. I know that's a lot of data, a lot of things for you guys at home and on the live to digest. Like I mentioned earlier, for those of you who want to take things a little bit slower, we will have a PDF document for you guys to absorb, to go over and read on your own time, just so you can take every single bit of information and be able to double check on it and check it with your very own work, right? But that's it for me, guys. Any questions, comments, or concerns? Maybe some questions from the chat, but Jesus Christ, that was a lot of talking, man.
It was a lot. I will say this much. We are going to try to close out the TA real quick. I'm going to go into a little bit of the alternate 60-day count, and then Brendan wants to talk about these Bitcoin dominance chart. So I'm going to go ahead and share my screen, and we'll see. I'll say this. It's awesome to listen to Jay talk, because everything he just said in my mind was corroborating all the research that I've been doing too. All the levels you've been talking about makes sense. Upside and downside targets also make perfect sense to me. The alternate count for 60-day cycles comes into effect when we really had all this weird stuff going on over the summer and the fall. So the main difference is that I start my current cycle here on the 14th of November, as opposed to Jay, I believe you start yours here on the 11th of December. So
Yes, sir.
Again,
That's
it
correct.
goes back.
That is correct.
It goes back to these weird 47, 41 day cycles, or that very strange like 86, 89 day cycle, depending on which one you think. I chose this one based on basically did a bell curve for where I think cycles fall, and I determined that this to be the more probabilistic scenario for me. So with that being said, I was even writing data today, or talking about the data today, and then we got this giant red candle printed, and I'm like, okay, is the cycle low here on the 3rd of January, or is the cycle low here on the 12th of January? Either one seemed like candidates. However, the 3rd of January is technically the lower of the two, but it is entirely possible that neither of these is correct, and we get another one coming in the next week or so, especially considering we had a day 58 cycle high here at about $49,000 for Bitcoin. It's entirely possible that we see this cycle run a little bit long. So that's what I'm looking at. Additionally, one of the main macroeconomic factors for Bitcoin that I'm looking at is the halving. Specifically, as it stands right now, the halving should be printed on the 22nd of April. So assuming that the count is in for day 59 of this one, that means we're going to get like 1 2/3 cycles before we hit that halving. And mentally, that does kind of make sense. We have one more full cycle to happen, and then we get basically 2/3 of the way through a cycle where we could theoretically see a cycle high followed by the low that we expect. In my personal opinion, we're expecting a small dump after the halving, as we've seen in previous years. So that is my cycle count. I'm going to any questions on this idea?
No question, but here's the thing, right? Whether you're working with my count, Zenith's count, or you're working at some kind of alternative count, I can speak at least for me and Zenith. I guarantee you, when Bitcoin finds a cycle low, our counts are like mine and his counts are going to be in lockstep with each other, right? Because we're going to probably decide on the exact same cycle low. So it's like
correct. They will be corrected at some point, and it will merge again.
Yeah. And Josh mentioned it earlier, but I don't know if he's already released it, but Bob Lucas, right? He's the father of the 60-day cycles. Once he comes out with that video, going over the variables when considering a left translated 4-year cycle for Bitcoin, keep a close eye on that, right? Because that man, he doesn't really miss the beat, although he missed the beat with Richard Hart. He doesn't like Hex. Sorry, Bob. You're wrong on that.
You know what's interesting, Jay? You gave the 50K minimum, and that's like a flick of the wrist, bro. Like, I mean, that's it. Think about it, man. Even getting back to all-time highs is a flick of the wrist at this point. So look, momentum is gaining. It might be a little slow, but momentum is certainly gaining, and I think we're going to see a very nice parabolic move going into the summer and the fall. But
yeah, agreed. Jay, Josh, I agree in a sense. Like, we don't want to just be parabolic right from the beginning. That's not healthy and it's not sustainable. We actually want healthy pullbacks. We want the ability to capitulate a little bit. We want to crab a little bit at times, and then we're ready to take off. But we need to build the foundation solid in these areas so that we have resistant points coming back down on these dips. And this is important, right? It's not just about going to the moon. It's not just about ripping to the upside, which is important, which we all want. But we have to have healthy pullbacks. And we have to find levels where we're going to find support. It's just important. Especially if we want to go to the higher highs that people talk about, right? If we're just going to get to 80K, then we're going to rip there and probably dump, right? But if we want to get to 100, 150K, maybe 200K, not saying that's going to happen, not financial advice, but we need that healthy movement up. We need a bit of a rip to the upside, some healthy pullbacks, and then bigger rips to the upside, some crab and whatever the case may be. But that's really, really important for the chart and for the market.
I do want to verify here. Boogie said something interesting here. He said historically we usually dump into the golden cross before we cross into the 50. Boogie, if that's on the daily, I'll probably jump on a call with you sometime this week to discuss it. But we are actually already above the 200-day moving average for Bitcoin, right? And we're also above the 50-day moving average for Bitcoin. I think. Correct me if I'm wrong. I think the 200-day is around $30,000. So I'm just going to kind of reiterate here that if we dump, like there's no way we move back down to that 200-day moving average at 30,000. I don't think that's going to happen, Boogie. But yeah, I just kind of wanted to address that.
Fair enough. All right. By the way, if you want to catch Boogie's TA, he will be on the Wednesday Mega TA stream. So we're looking forward to having him on here with us then. And Jay's going to be on that one too.
That's
all right.
Fire.
It's going to be great.
It's going to be fire.
But definitely don't miss that one. With that being said, we're going to talk about Bitcoin dominance. Brendan, what you got for us?
Yeah. So I think that always when we're starting to see markets move, one thing you want to keep an eye out on is the Bitcoin dominance chart, right? We want to be able to see, hey, where are we moving? Is Bitcoin outpacing alts? Are we starting to get some pumps on alts as Bitcoin comes back? And I think that it's always important to keep an eye on it. So it's really, do your chart, do your technical analysis, but some of the on-chain data is important to look at as well. Because there's just a lot that we can bring in to help us make our decision so that we can have as much importance as possible. If you want to share, Zenith, if you want to share the Bitcoin dominance chart, you can. You want me to share it?
I got to pull it up right here. So what we're looking at here is the weekly chart for Bitcoin dominance.
Excellent. I think we're about 51% right now.
Yes, we are 51%. We topped out here with a wick up to about 55.
Yeah.
And then in comparison, I believe, we had the low of about 38.9% back in September of 2022.
And what does that show you? September 2022. What's significant about that?
If I recall correctly, that should have been the bottom of the market, or that could have been the point where all the altcoins and very volatile stuff topped out.
Yeah, so Bitcoin moves first, and then we start getting some profits moved into alts, right? That's why I think it's always good to have money in Bitcoin, maybe a bit more than you would have normally early in a cycle, because you're going to be able to then take those early profits from Bitcoin and roll them into the alts, into Ethereum, into other things. And as Bitcoin and some of the market's been dumping, and we'll see a little bit later, we are seeing some coins continue to move heavily to the upside, potentially some Richard Hart coins, and we will look at some crypto bubbles later. But I think it's important just to take a look at this as you look at the charts, as you look at Bitcoin, as you look at Ethereum. We want to keep an eye out for the dominance. I just wanted to mention that.
Yeah, real quick, if we can pull up the chart again, I just had one topic I want to talk about that's going to tie into some points later on, which is that we did just have the Bitcoin ETF approved. So normally what you would think is that Bitcoin dominance should go up because that means more and more people are buying Bitcoin. However, we actually saw the opposite of that. You'll notice here, these last two candles, this is that Bitcoin pump the week before the ETF release, and this is the dump that we had. But not only is this the dump in Bitcoin price, this is also where Ethereum pumped where Bitcoin did not. This is specifically one of those one of the data points that points to the idea that people believe that investors rotated profits from Bitcoin into Ethereum holdings. So something like this, it's a very small time scale. However, it does lend credence to that idea. Here we see it on the daily chart, and just like that, up, 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 down, down, down.
Good points, yeah.
Fair enough. All right, last round for comments on TA before we head over to Josh with macro. Going once,
No,
going
sir.
twice.
Let's move on. My God, this is almost an hour's worth of TA, man.
True, but people got their money's worth out of that, I'd argue. So, is it dense? Yes. Is it important? Also, yes.
Almost
All
as
right,
dense
Josh.
as my brain.
Yeah, I can take it over from here. I'll give Jay an opportunity to rest his voice and all that stuff. What's funny is we're going to be talking about this in like 72 hours with Axis Alive and Boogie and Toby Wan. So this is just a little bit, this is just a little bit of the conversation that we're going to be having on Wednesday night. So, but great work, Jay, as always. All right, let's go ahead and get into what the other markets are going to look like. Give me 1 second. I'm going to share my screen here. All right, is that shared up? Ooh, okay. I hate when it does that. Give me 1 second here. All right, cool. All right, so the first thing that we're going to be talking about here, let's talk about the real estate market, what that's going to be looking like over the next 3 months. All right, so for January into February into March, Q1 of 2024. So when we think of what the real estate market's going to be looking like, the first takeaway that I gathered when I did the research into this is that buying and selling activity during the first quarter of the year is usually slow, but it picks up momentum going into the springtime. And if you think about it, logically, it makes sense. It starts to get colder. You got holidays, that are coming up, especially in December, and you got the holiday hangover period in January and February. It's cold out, so people don't really want to go out looking for homes. It's coming up on tax season, so people have other financial obligations and other financial ideas before they're going and looking at buying homes. And if we take a look here, we can take a look at the chart that I have pulled up here. This is just simply off of Redfin. So if we take a look at every time we see the dips here, so right now I'm looking at the 5-year average. Here we are right now in December, January. If we go back here, for some reason it's not showing me the dates. Hang on real quick. All right, can you guys see the dates here now? Is that date popping up? Okay, gotcha.
Yeah,
perfect.
Can we zoom in on this chart?
Yeah, let me see if I can zoom in on it real quick. Hang on. See if I can zoom it in there. Bear with me, and I'll blow it up also on here just to make it a little bit easier. Oh yeah, perfect. All right, so January 2023. So this time last year, we see the summertime going into the fall into January of 2023. We see a downward trend leading into pretty much selling activity going on. We will also see the same thing back in January of 22. It didn't drop as much, but it was still a small little decline compared to the summer of 21. And then same thing here, in October of 2020, we saw pretty much the peak, and then we saw a little bit of a downslide right there. So typically January, February, March, you're going to have less buying activity, less selling activity going on throughout the real estate market. Next point that I want to bring up, the second point, is experts are encouraged by mortgage rates declining recently, which could motivate more house hunters to begin searching for properties. And what I mean by that is, if we take a look here, all right, I'm going to go ahead and click over on so this is the 5-year interest rates. So as we all remember, we saw interest rates start to move up drastically in 2022 and 2023. But if you look at what's interesting here is in October of 2023, we saw the peak high in mortgage interest rates. All right. And this is off the this is the Freddie Mac website. And since October, now remember, these are typically put out each week. All right. The mortgage rates are a daily thing, but this graph is typically on the week basis. All right. So as we can see, it starts to downslide here. So what we are seeing is that as the Fed rate stays the same, it is giving mortgage companies more and more confidence that the rate is not going to continue to be increased. Therefore, they can start to drop it a little bit, ever so slightly each day, to still be able to maximize profits. So it looks like it's going to pretty much stay the same as far as the Fed rate hikes. It looks like we're not going to see any more Fed rate hikes coming around the corner. And because of that, the daily mortgage rates are starting to come down a little bit. So that's what we're seeing. All right. And then point number 3 is buyers will continue to face low housing supply challenges. All right. So we are in a very low housing shortage right now. So if we take a look at this chart, let's go over the last 10 years. This is total housing inventory. If we look back here in 2014, we've seen a steady decline in the availability of homes. Simply, more and more large investment companies are starting to buy up property to rent out. We see BlackRock that is becoming pretty much a real estate mogul. We see Vanguard doing the same thing. And a lot of boomers would rather hang on to their houses than downgrade. That's also a trend that we're starting to see a lot more of. Is boomers' number one source of wealth is pretty much in their property, and that's the last thing that they want to give up. But as more and more boomers get into retirement age and they start to die off, we might see that trend reverse a little bit. But as it stands right now, boomers aren't selling their property, and any real inventory that's on the market, it's getting eaten up by those that are looking for homes or those that are looking for investment properties to purchase and to make money from. So that's the real estate market. Give me one quick second here. I'm going to stop sharing the screen real quick. Come back over to here. So next we're going to talk about global markets. So in the global
Josh,
market,
can I ask you a question about the real estate market?
Yeah, go ahead.
There was a bill that was introduced into Congress saying that hedge funds shouldn't be able to own properties, and if it passes, they're going to have to divest all of their real estate holdings over 10 years. Now, I wish it was faster than that. I think it should be faster than that. But what would that mean for the housing market if they did restrict BlackRock and these other hedge funds from holding real estate?
Yeah, well, quite frankly, that to begin with, that's going to be an uphill battle, from the jump. You think of all the lawmakers that are already owning multiple properties that already have sort of real estate stuff going on. So they are, it is going to be very tough, especially given the lobbying that the large investment funds have. It's such an uphill battle. But we can play the what if game. What if this bill gets passed? What would it mean? We could very well see, and I believe the current bill right now, it's proposed that these investment firms would have to divest 10% of their investment holdings over the next decade. And that's how that would pretty much be the offshoot. So you could definitely see more properties coming onto the market, which ultimately would, it would lower the price. It would raise the availability of properties, which, we could see a correction in the housing boom that we've had going on since the middle of, the 2010s decade, pretty much. We've seen, especially since the COVID timeframe, we've seen nothing but a surge in housing prices.
Yeah.
So, that could help bring it back into fix a little bit. But as it sits, it's going to be a very uphill battle, and it would seriously shock me if that bill even got passed.
Yeah, I agree with you. I think it's an uphill battle, but I think it's a really essential bill. I think it would be very, very good for the United States person, for the people, ourselves, the little guys. So I think that you should call your senators. You should call your representatives and you tell them, hey, this makes sense. It's important. So just so you know, the bill is called the End Hedge Fund Control of American Homes Act, right? Hedge funds control the market. Like you're saying, BlackRock controls the market. And we need a way to keep them from doing so, because literally they control us through the markets. So just want to put that out there. Thanks, Josh.
Yep. Any other real estate market questions from the panel? And I'm looking through here.
I was wondering.
What you got, Jay?
Go ahead, Josh. Okay.
No, go ahead.
I was wondering, while you were researching this, did you happen to take a look at the availability of land, right? Because I think a lot of people will share the concern, right? Okay, I know that one of the primary strategies after the bull run is you take some of that capital that you take from the top, right, and you invest it into your other assets. I think one of the primary assets that is on top of people's list is usually real estate, right? Especially if you got guys here who are looking to buy their first property. Maybe they're trying to start a family and they want to get a place for their wife and their kids to kind of help them settle down. So did you take into consideration the availability of land? Do you have that information on hand? Because I think that land is also a good option if you don't have the availability of the starter home, right? The 3-bedroom, 2-bath. Maybe you consider building on land instead.
Yeah, I did. I didn't incorporate that into the analysis when I did the analysis. I just did a quick Google search here, and it looks like the National Association of Realtors. First thing that popped up, I just did land, real estate land trends. I'm looking at something here, but this is an outdated article. This goes back to 2021 when we saw, land sales rising, alongside with existing homes. I didn't incorporate it in there. It's something that I can, moving forward when we get into Q2, it's definitely an aspect that I could consider as well when we're, when I'm looking into this stuff. But short answer is I didn't really put much research into the land aspect. Okay. What I do know is that land is just being sucked up. And especially like here in Maryland, man, like there are subdivisions that are popping up like crazy. I know when I went down to Miami, bro, there is construction and new builds all over the place in Miami. I know Brendan could probably talk a little bit on that, but I know here in Maryland, we got new communities and stuff like that popping up all over the place. And so land is going quick.
Yeah, Miami's insane. I'm not going to touch on it too much, but essentially Miami doubled its population during the pandemic. People from New York, mostly New York, but also other parts of the Northeast and the West Coast moved to Miami during the pandemic, right? Working remote, getting a better bang for your buck, and housing prices and condo prices have gone wild. But we have a crazy amount of skyscrapers being built just around me. If I walk 10 minutes in a circle, 10 minutes this way, 10 minutes that way, there are like 15, 50 floor plus high rises going up around me. I can count boom, 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 boom. It's insane the amount of building that's going to Miami. So we'll see what happens when those are all built over the next 3 to 5 years and how that affects the market down here. But definitely we need more options.
All right, I'm going to move on to global markets unless there's any final questions. All right, cool. Let's hit global markets real quick. So long story short, Q1 2024, global markets are pretty much going to stay stagnant. They're going to remain flat. 2 specific reasons for this. Number one is despite the relief in interest rate hikes, long-term interest rate shock is still a thing, and it's still going to grip the global economy. All right, so yes, U.S. dealt with inflation, but the entire world has been dealing with inflation as well. And while the U.S. is the front runner when it comes to finances and global trade and all that stuff, when you think of the global market, which is this subcategory, you have to take into account that other countries are still suffering from high inflation. That's just the case. All right, so while the United States, while we might be seeing temporary relief, there's still in the global market, there's still some turmoil in markets given the global inflation that we've seen pretty much since the COVID-19 pandemic. So that's number one. The second point is you got to think about geopolitical risks as well, okay? That remains high. All right, we got 2 major conflicts going on with Ukraine and Russia, and then we have Israel, Hamas. All right, and also this is looking more long-term out. This isn't so much Q1, but also if you think 2024 in general, here in the United States, we're going to have election season coming up. So that's going to, that will adjust a little bit, but we can talk about that when we get into the Q1, Q2, Q3 theses down the road. But yeah, interest rate hikes, although we have a little bit of short-term relief, long-term shocks are still going to be in place. And we have geopolitical risk remaining high with 2 major conflicts going on. Plus the situation going on in Yemen right now, with missile strikes in Yemen and all that stuff. It's, so I foresee the global markets pretty much remaining flat and crabbing while everything gets figured out. So any quick questions on global markets before I go to equities?
Makes sense to me.
Real quick. I mean, one thing I just want to mention on the global market. It's interesting, right? Hong Kong released a Bitcoin spot ETF a while back. Now China is considering a Bitcoin spot ETF, right? So that's something that we consider. And we might get into ETFs a bit more later. But we had 11 ETFs approved, right? That doesn't mean that all of those hedge funds, all those banks are actually going to go through with offering a Bitcoin spot ETF to their customers, right? Vanguard said no. This was a shock to me. I kind of just assumed everybody wanted to play. But hearing China and other countries now want to jump on this because the United States did, I think that's really something important to look at from a global perspective.
Yeah. Vanguard, hold the L, man. Hold that L forever.
Bro, seriously. They're starting to remind me of Gary L. Gensler.
Josh, you are muted, my
Hotkeys,
man.
Josh, hotkeys.
Yeah, my bad. I'm not even using keys, man, because I'm bouncing back and forth between my thesis notes, what I want to share on screen, and the studio. So,
Good.
Yeah, plus I got my daughter yapping in the background over here, so I'm trying to mute as much as possible, so just bear with it. All right, so next up, we're going to be discussing the equities markets. My main point with equities markets right now is what's interesting. So I'm going to speak specifically about the S&P 500 here. The S&P 500 equities concentration is now at levels that have not been seen since the 1970s. Meaning the rise in stocks over the last year has been driven by a cluster of tech mega cap stocks. All right. So I'm going to pull this up real quick. So typically what happens when we see a large expansion in the percentage of the top 10, when we see that number start to expand, what we see is that usually precedes a global, not necessarily a global, but an economic downturn, so to speak. So, when we see that number start to expand, and let me just show this chart here real quick. One quick second here. Here we go. All right, so you guys can see this right here. All right, so the average, you guys see that okay? That's pretty much clear as day, correct?
Yeah.
Yep, good to go.
All right, perfect. All right, so the average over the last 35 years has been a 20% concentration in equities for the top 10 highest stocks on the S&P 500. The peak during the tech bubble, we saw it at 25%. Currently, right now, we're sitting at 32%. All right, so what that means is the concentration of stocks in the top percent is expanding, which that I'm going to stop sharing my screen here real quick. What that will typically mean is that more. So the strength in the bonding of the top 10% stocks is starting to stretch out a little bit, which if you, I don't know, I'm trying to think of the best way to describe this or the best comparison to use. If you have a military force and the entire force is clustered in one area, that's going to be a lot stronger force than if they're spanned out over a larger area. Okay. Think of the 101st Airborne during the Battle of the Bulge. Okay. They were stretched so thin and they didn't have a concentration that it sort of allowed it to get whimsy and flimsical. And that sort of thing typically precedes an economic turndown. So that's the main point that I wanted to show there. Equities markets, kind of similar with global markets. Don't really expect anything to blow off, but don't really expect too much of a downturn quite yet. I think we need to get into Q2 and Q3 to really be able to reevaluate the equities markets. Any questions on equities markets before I move on to commodities?
Nope, but I am going to jump in here real quick and provide some context. So, yes. Josh, you are talking about the top stocks in the market. So this is really what we're talking about. It's just Microsoft, Apple, Google, Amazon, NVIDIA, and Meta. All of those guys are over $1 trillion market cap, except for Meta, who's at like $962 billion. And then after that, the list drops off pretty fast because then we have like Berkshire Hathaway, Tesla, Visa, JP Morgan Chase. And at that point, we're down below a $500 million market cap. So it really shows that the people that have had the most gains in this market are very concentrated at the top, and the rest of the market really isn't pulling its weight, so to speak.
Jay, what were you going to add?
Oh, I was just going to add that the small amount of macroeconomic analysis that I've seen over some of the folks that I follow, like for example, Ben Cohen does a lot of macro analysis over at his channel as well. He was talking about the potential for an economic downturn as well, the same way that you went over today, Josh. And he said that yes, it is possible this year, but it is more likely that it's going to be a lagging effect, right? He certainly doesn't expect it to happen within this year because we are in an election year. And you also have to consider the fact that, hey, if it does start off this year, right, this actually might be the opportunity for crypto to do exactly one of those things that a lot of folks have been talking about, right, over the past few years, which is that decorrelation, that decoupling of the two markets, right, of the cryptocurrency market and then the traditional financial markets, right? So if it is going to happen, a lot of analysts are expecting it as a lagging thing, right? And like I mentioned, if it does happen this year, then I think we finally are able to see that decoupling, at least the potential for it.
Good stuff. All right. Last thing I'm going to talk about is the commodities market. I'm going to specifically focus on oil and precious metals here. Just a quick summary. So one of the things that I like most about the financial markets is how they ebb and flow together. And, you know, I spoke earlier about the global markets when we have the long-term interest rate shock that's taking place in the geopolitical risks. Well, if you take those into account, now I'm going to specifically speak about oil here for a minute. So for Q1 2024, I expect oil prices to pretty much remain largely flat. All right. And the reason for that is despite the fact that that we're seeing long-term interest rate shocks and we're seeing the geopolitical risks, we are seeing the demand for oil rise. All right. So the demand for oil is going up, not only due to situations going on in Hamas and Israel conflict and Ukraine and Russia, but we're starting to see a much larger surge in oil prices here in the United States and in Europe. So because of that demand, I foresee that pretty much counteracting the geopolitical risks and the long-term interest rate shock. So that is going to pretty much cause that's pretty much going to cause oil prices to remain flat. So that's plus, we're going to be getting into the swing of the full political season here coming up. And especially if you're here in the United States, the last thing that, any incumbent president wants when they're running on a platform is prices going through the roof when it comes to gasoline. So, don't expect them to pop down too much. Expect them to stay pretty much where they are. They may fluctuate a little bit here and there, but they're pretty much going to remain flat. And now precious metals. So for Q1 2024, what I see is due to the Fed, the Fed rate cutting cycle and falling U.S. real yields, I think that's going to push gold prices and precious metal prices upward. And that's typically what we see coming out of I don't want to say insecurity, but coming out of the uncertainty that we just went through in 2022. That has a little bit of a lag effect also, but as the interest rates start to come back down, as money starts to free up, we're going to see an increase in gold and precious metals. So expect that to go up slightly here in Q1 2024. So, yep, that's what I got for commodities, equities, global market, and real estate. Any final questions or any questions to that?
I was going to say your finish on precious metals is actually an excellent segue into the next point, which is Brendan's going to be talking about the interest rates. And as we've talked about previously through this cast, it's been one of the pretty consistent points I think we've all had.
Yeah, definitely. Interest rates are important. We had a release just recently, this past week, for the CPI numbers. They were a bit higher than they anticipated, which seems to be pretty common these days. The one thing is essentially we increased 0.3% in December on a seasonally adjusted basis. Now, I say seasonally adjusted basis because they actually have updated how they calculate seasonal factors they will change how they taking into consideration seasonal factors in February 2024. So last release of the CPI reports, I noted to all of you that they changed how they calculate medical data and medical inflation in the CPI report. Actually, they changed it a lot. And the reason, in my opinion, is that it was going to show negatively. The medical inflation was actually going to rise quite a bit. And so instead of allowing that to make the charts look poor, to make inflation look like it's still rising rather than falling, what did they do? They just decided to change how they calculate medical inflation. And therefore, it's going to show that it is now negative. So in December, medical inflation was down 0.1%, right? In reality, with the old ways that they were looking at medical inflation, it probably would have raised multiple percentage points. So minus 0.1 versus raising 2, 3, 4, 5%. So think about what that would have done to the CPI numbers had the medical inflation not changed in how it was calculated. Now, I haven't done a deep dive into the changes of the updated seasonal factors, but I will be talking about that on a future episode because I think that it's important. I think that all of you need to know what the changes are, right? What we see in the news, what we see from the Fed, or what we see is just the CPI numbers, right? They don't tell you, unless you look into the asterisks, what is changing in their calculations and how they calculate these numbers. And for you to really understand what's going on in the market, it's important that you understand how it was calculated and what has changed to current calculations. So while inflation looks like it's going down, and I've mentioned this multiple times, what's the most important metric that the Fed looks at? Well, they look at the CPI items less commodity, less food and energy, right? So as Zenith just put in the chat, 3.9% was 4% previously. They thought it was going to be 3.8%, so it didn't fall as much as they wanted. But if that number continues to drop, that's what they look at, right? They look at these taking out the really food and energy, which is very volatile. They don't have as much control over those because we look at wars, we look at supply chain issues. These are things that can affect those numbers that really might not give a true gauge on how inflation looks. And I do agree with them on that sense. It's a really important number to look at. And people weren't looking at that early on as we continued to raise rates. As that was rising, people expected rates to sort of stay flat. But what happened? We went up to 5.25, 5.5. But it's really important for you guys to know the truth of what's happening with these numbers. So do your research, read the notes that are coming from a Fed perspective. So they release a large, maybe 30, 40 page document every time that they release the consumer price index. And you'll be able to look at everything. So you can not only look at the overall numbers, but you literally have like 15 pages of every single thing that they will show you. Did it go up? Did it go down? If you look at the food prices, they will talk about milk. They'll talk about fruits. They'll talk about vegetables. They will talk about everything that you can consider. So they'll go into all of these things in a deeper dive. So if that's of interest to you, that's great. But to me, I think understanding how they calculate the numbers, what the numbers are, and are they cooking the numbers at all, right? Are they changing how they calculate from one time to another? And if they're changing the calculations, then what I want to do is I want to look at what would these numbers have been if they hadn't changed how they calculate them. And I want you to understand that this is an important way of doing your own research, right? All we hear is, okay, inflation went up X percent. Core inflation went up X percent, or it went down X percent. But for me, it's important to understand, hey, what did anything change in how they calculate those numbers? And that's what we want to bring you knowledge about. So another thing that I think is really important, and Zenith, I don't know if you want to share the screen or not. If you want me to share, if you want to share the CME Fed Watch, but I do kind of want to share that. So I'm going to kind of present and
go for it.
Share my screen here.
Real quick, what CME Fed Watch is is a prediction tool based on futures markets to look at what the market believes interest rates are going to be in the future. So notably, with the actual FOMC meetings, we have one at the end of January, 30th, 31st, and then we have another one in mid-March, about the 15th or 16th. So previously, you might have heard Gary Gensler at the last press conference Jerome Powell, head of the Fed, he was talking at the press conference about they're anticipating 3 interest rate drops over the course of 2024. So, like Brandon was showing, if we have the CME tool pulled up, the January Fed meeting is actually showing about a 95% chance of no change. However, if you click over to that, the 20th of March tab, bada bing, this is where we see the first major change of the year. Brendan, take it away.
Yeah. So as you said, this could be the first major change in how the market and how the Fed starts to reduce interest rates. Now, historically, this is something that's important to look. And I'm just going to kind of show you this website. So cmegroup.com /markets/interest rates. I keep this part of my folder when I'm looking at markets, when I'm looking at crypto. This is one of the tools that I look at. And so we can see January 31st, we're expecting nearly 100%, or I should say the market's expecting nearly 100% that we are going to stay at 5.25 to 5.5 for our interest rates. Now, moving forward to March, again, this is almost 2 months, right, of time frame. We look like we are very likely to start to drop rates. And so when you say, hey, has the market started to price in these factors, this is what we are talking about, or what some people are talking about. So yes, the market will start to price in the thought of interest rates dropping. And this will help also, as Jay was talking in his technical analysis, these are things that will also help to push the price up, at least in the short term. Now, so we look at this, March 20th, they expect 72%, so almost 3/4 of a 75% chance that this is going to reduce interest rates. Now let's go to the next meeting, which is the 1st of May. What is their expectations of interest rates there? Why are we not changing? I don't know why it won't let me change. Let me refresh this website real quick.
May not be data for that, but
there is, because I've been looking at it over the last several days. But I will tell you, because I already looked at it, we have 71% chance of reduction of interest rates in March. And then there was a greater than 50% chance of reducing interest rates at the next May 1st. So it looks like this website is having a bit of issues. Sometimes, let's accept all cookies and see if that does anything.
No worries. I'll jump in here real quick.
But,
so
yeah,
just
about
as
50% for
some
May.
pacing. Yeah. Just as some pacing for how the year goes with the FOMC meetings, there's 2 meetings per quarter. So if you look at 3 interest rate drops throughout the year, theoretically, you might be inclined to say that these interest rate drops are going to happen before the election. And if you do that sort of thinking, then that means that we should be anticipating 1 interest rate drop per quarter. And with that being said, they're probably only going to be dropping about 1/4 of a percentage point. I don't anticipate them doing any more than that. And if you want to go look back at some of the material that the Fed put out last year regarding their meetings, some of their predictions were saying that they anticipate being at 4% in interest rate by the end of 2024, with the possibility of being at 3% interest rate at the end of 2025.
You're muted, my friend.
Muted.
Sorry about that. If we can pull that back up, the website did come up with an error, but then it started working. So March, what we were saying, 71%, 70%. You can see this is constantly updating. Just a second ago, this was 71.8%, right? Now it's 70%. So we are constantly building in to the market. So for May 1st, they're now talking about, if you add all of these numbers up, right, we're talking about over 70% chance that we will be 475 or lower. So what is this saying? A little bit like you're talking about, they're considering that we're going to start having a drop in rates probably once every quarter. So May 1st would be quarter 2, right? So they're saying, okay, well, it's either May or June, we're going to see another reduction in interest rates. So their best case scenario or most likely scenario is 4.75% to 5%. You look at June, and they're still considering we are going to be dropping. So it's interesting that this tool thinks that they're going to drop more than what the Fed had talked about. So every meeting, what are they looking at? The highest percentage is in the opportunity of a reduction of 0.25%. So if they're correct, the biggest percentage, now I'm not saying I agree with them, okay? I actually don't agree with them. I agree with more of what Zenith is saying. 3 to 4 reductions over the course of the year. They're talking about a reduction every meeting. This is their expectations. I don't think that's what you should expect. But the one important thing that I think that you should take into consideration when you think about this is we pump a little bit leading in to reduction of rates, and then every single time historically we actually dump. Okay, so it's a very big sell the news event when they start to reduce interest rates, and that's for the market in total, not just crypto. So my thought process potentially is there may be a bit of a time if certain coins have pumped a lot that I might start to shave some profits off as I expect a dump at the reduction of interest rates. And then of course, I'm going to put that back into the market if we do get that dump. But I'm not taking major amounts of profits there, but probably shave a little bit off the top or rotate some of those profits into coins that haven't pumped yet and then move from there.
Excellent. Time to throw it back to the panel. Any comments or questions regarding interest rates for the quarter?
Yeah. So are you expecting them to remain unchanged pretty much, or are you expecting this quarter for them to begin to reduce the Fed fund rate?
Yep. March. I've been saying this for 6 months. Okay. I've been saying this for 6 months. I've been eyeing March as the first time that they will reduce rates. So March is still Q1. And so I do think we will see a reduction of 0.25% at the March FOMC meeting. Yes.
And
I concur.
Would that be just a 25% basis point, you think?
Yeah, just 0.25%.
Yeah, gotcha. Are they also going to concurrently start to loosen the quantitative tightening that they've been doing? Or how do you foresee the relationship between dropping the fund rate and loosening up their quantitative tightening? How do you see that playing out this quarter?
Yeah, Zenith mentioned something about an election coming up. I think anytime there is an incumbent that is going to be running again, their goal is to make the markets look good, right? And so they're going to want to ease the money. They're going to want to print some money. They're going to want to reduce interest rates leading into the election to try to pump the economy to make it look maybe better than it is, right? And what are ways that you do that? You change how you calculate the CPI numbers. You start to print money. And these are things leading into an election that can maybe make the incumbent look better. That's their hopes. Currently, the incumbent has one of the worst, if not the worst, sorry, I lost my train of thought. But people don't like the way that he is running the office. And so one of the ways that you can turn people's minds around, allow their portfolios to look bigger. And so, yes, quantitative easing will be coming in the near future, I think.
All right. Any more on the topic? Good.
Yeah, I just wanted to add real quick that I know this. You guys mentioned it already. The CME and the participants there are a little bit more aggressive with their predictions in terms of the QE, right? How much QE the Fed is going to do this year. I'm actually also in an agreement here with Brennan and Zenith because it's going to be fairly consistent and in line with what Chair Powell has been talking about the entirety of last year, right? Especially near the tail end of last year. If you go over that recent data, they talk about that the overwhelming majority of Fed participants vote that were even if they're going to start QE this year, that they're going to stay elevated, like the rates are going to stay elevated higher for much longer, right? So it all makes sense what you guys said there also.
Fair enough. Alrighty, for the next section, I'm going to cover the 2 court cases that I did research on, and then after that, Brennan, I'm going to pass it over to you for what I think is the big one. So first off, we have a little bit of a hangover from 2023 when it comes to court proceedings. Yes, Sam Bankman-Fried was found guilty in 2023. However, his sentencing is set for for March of 2024. This being said, actually one of the charges that he was found guilty of has effectively been dropped by the courts. This was, of course, the campaign fund contribution violation. Effectively, the government investigated itself and found no wrongdoing. Take that as you will. However, at the same time, he's still guilty on 6 other counts and facing massive jail time and massive penalties for stealing upwards of $2 billion of investor assets. Additionally, the other biggest name in crypto effectively did take a plea deal last year, and that would be CZ of Binance. He did plead guilty to one charge of violating the Bank Secrecy Act, and he is scheduled for sentencing in February of 2024. So that is what we have going on in regards to the legal front on those aspects. However, there is one legal case that is coming up that is the talk of the town, especially when it comes to hexagons. Brendan, what's that?
I believe there is a man that created a wonderful coin called Hex, and his name is Richard Hart. He also created Pulse Chain, PulseX, and there is a bit of a legal battle going on, and they had a hard time finding where he lived. They couldn't serve him his papers, and it took a while, but finally, at the end of last year, he got served. You got served. This isn't a dance battle. You got served by court papers. And we were saying, okay, what is Richard Hart going to do? On this channel, we've been talking about this since the first time that the SEC announced that they were suing Richard Hart. And there were a bunch of different thought processes, but I think the most common of what we wanted was to see Richard Hart fight. We want him to take the SEC to court, and we want him to stomp all over them. And what happened this past week? Well, his legal counsel put some documents into the court and said, Mr. Richard Schuler, who goes by Mr. Richard Hart, has the want to take you to court. And not only that, but he has hired a few lawyers, and it's pretty incredible. So, Zenith, how much do you want me to go over now, or you want me to just tease that?
Take it away.
Okay. So essentially, Richard Hart not only decided to take the SEC to court or say, okay, yeah, let's do this. Let's battle. Let's rumble. I'm not paying a fine. Not only am I not paying a fine of maybe 20s of millions, 50s of millions, but I'm going to spend potentially hundreds of millions on the top law firms in the country. So let me just go through some of the lawyers that Richard Hart has decided to put on his team. Now, you think, okay, let's just find one really good lawyer to represent me. They're gonna charge me millions of dollars, especially if this case is dragged out. But Richard Hart said, no, you know what? I don't think one lawyer is good enough for me to have on my team. So I'm going to have 11 plus lawyers fighting on my behalf. Now, a few of these lawyers that he has is really, really interesting. So I posted this on Twitter, and I've been responding to a lot of people on Twitter that have been posting about the case. Unfortunately, a lot of people that you see on Twitter post things just to get views, okay? And I understand that. I haven't really been active on Twitter a lot in my life, sort of just starting to become active. But I also don't want people to spread false information, or to maybe not spread false information, but kind of allude that something's happening and it's important when it really isn't. But there are a couple of things that are really notable. So Quinn Emanuel, Urquhart and Sullivan, LLP, they're the first lawyers named on Richard Hart's lawyer team. What's important about them is they were the top litigation lawyer in 2023. So at the end of every year, all these law journals, they vote for who the top litigation lawyer is, who's the top tax lawyer, et cetera, et cetera. So who does Richard Hart hire? He hires the number one rated 2023 litigation lawyer for his team. Now, there are a couple other notable lawyers. I'm not going to go through each one of them, but I think it's really important to note that he hired a lot of lawyers that have previously worked for the SEC, right? So if you look at, I was talking to Zenith earlier, and it was really interesting because there's Michael Liftick. He works for the SEC for over 9 years, and he was deputy chief of staff and acting chief of staff at different times. We also have Chris Davis, who worked for the SEC as well, and he was a senior counselor for nearly 10 years. A few of the other firms have long history in representing companies and people that have been taken to court for crypto purposes. So Kirk and Ingram is a powerhouse for corporate lawyers, a corporate law firm, and they have been part of a lot of different crypto markets and crypto litigation in the past. So they are an expert on crypto court cases. So what are we doing? What is Richard building here? He's building an incredibly powerful base of lawyers to absolutely, in my opinion, crush this case that the SEC has brought upon him. So we have litigation lawyers, the best of the best. We have crypto lawyers, the best of the best. We have SEC lawyers, people that have worked in the SEC and now work in law, the best of the best. So he has built literally an incredible plethora of lawyers to represent him. Now, some of these lawyers don't even normally work in New York. So they've actually asked the courts to allow them to represent Richard Hart in this case, and they've put their name in the hat for that too. So it's really, really, really bullish, in my opinion, of what Richard Hart's doing. Now, this isn't just for Hex. This isn't just for Pulse Chain. This isn't just for PulseX. This is just for the Hexagon community. He is fighting for all of your rights that are being absolutely stomped or trying to be repressed by the SEC. The SEC doesn't want you to be able to invest in what you want. They don't want you to invest in crypto. They don't want you to be free to do with your money what you want to do with it. And so this is great for the Hexagon community, for the Pulsechain community, Pulse Chain community. But this is really great for everybody. If you're a Bitcoin maxi, if you're an ETH maxi, if you're an altcoin maxi, whatever your altcoin is, Richard Hart is trying to give precedence to all of you by shutting down the SEC. What happens if he wins this court? If this court case goes to court and he wins, that becomes legal precedence. We have legal precedence already from the XRP case, which is great, but he is trying to increase the legal precedence that is giving win after win to the crypto community. So again, this is great for Pulse Chain, PulseX, and we have seen massive green candles over the past week since he has announced this. But this is great for all communities. So if you're in Cardano, if you're in Ethereum, if you're in all of these other layer one, Solana, this is good for everybody. You want Richard Hart to deal the SEC, not just an L, but a massive L. And if he does, I think we're going to start see more of these other people that have maybe shunned Hex and shunned the Pulse chain community for the years start to maybe warm up a little bit to Richard Hart, maybe warm up a little bit more to his ecosystem. And that, my friends, to me is very bullish.
Well said. Tell you what, I'm going to close out this segment by actually just reading the tweet that he posted for the filing. Quote, I am fighting the SEC for your rights. 11 of my lawyers filed this today. Ironically, today the SEC's Twitter account was hacked and a fraudulent message was posted. The blockchain literally solved this exact problem. The SEC is attacking the very tech that it needs: cryptographically verifiable authentication, proof and publication. Blockchains are the first and only immutable public ledger communications technology. Open source peer-to-peer software. Millions of people use blockchains to publish pictures, texts, messages, literature, and more stuff every day. Technology is the future. We pray to the courts to defend the Constitution and your rights, and even #Bitcoin. So that's what we got there. Thank you, Brendan, for the excellent analysis. Panel, any thoughts on Richard Hart taking the SEC to court?
Yeah, just real quick, Will. Shout out to you and shout out to Zenith, as well as Nate and Jeff, because you guys talked about this on the Whiskey Wednesday stream. How whether you guys thought that he would fight, what you guys figured would happen. And I still stand by this 100%. I think that it was imperative that he fought this tooth and nail every step of the way, because even if he had decided to settle or anything like that, if there was even any sort of if he even allowed a little bit of doubt as far as what happened, even though everything's on the blockchain and all that stuff, even if there was the most smallest sliver of doubt that he wasn't legit and what happened with the funds wasn't legit, then I don't think it would have done good for adoption going into this cycle and the future cycle, because it could have, because that tarnish, that brand would have always been there. Hey, he didn't fight it, he settled it. So, I said this a couple months ago, and I know we've all had different things to say, but I said it was 100% imperative that he came out and he fought this down. And seeing the fact that this is being fought, then I think it's phenomenal. I think it needed to happen.
Ding ding ding, fight.
Good stuff. Will, what you got?
I was just going to say, I wanted to, I know that you highlighted the chat earlier, but Abit Hex put out that Richard Hart didn't get served. He decided to come out and take action to fight for freedom of speech. I still believe this is, and I'm reading Abit's, there we go, Abit's quote here. I still believe this is the best marketing. He's fighting for something in everyone's interest. So yeah, I guess they weren't able to, they could never, you can't find Richard. He's like that, oh shoot, it wasn't Matt Damon.
Tony Stark, Will. Tony Stark. Remember, Tony Stark doesn't like getting served. He doesn't like being handed things.
America.
I mean, it's interesting, Jay, that you mentioned Tony Stark, right? If you think about this from like a perspective of Marvel movies, right? We have all of these top superheroes coming together to fight.
Take this away.
To fight our man with the powerful glove. This is essentially what Richard Hart has done. He has put together a team of the best lawyers that the world has freaking ever seen, and he's like, SEC, this powerful glove that you got ain't enough to stop me.
Yep. And here's another thing, right? We've spoken about this prior, right? When all of this stuff hit the fan. I think anybody like who's familiar with the federal government and who has dealt with the federal government will tell you that these guys don't lose, right? Especially when you consider a place like the SEC. They have a bottomless, right? They have a bag of holding full of money, right? It's a bottomless pit of money that they can pull from. Okay. And so there's a reason why over the past few years, when we've heard of all of these different crypto companies coming to battles with the SEC, they just settle, right? I think it was either Kraken or Gemini. They settled the first time. They got sued again, right? By the SEC and by Gary, right? There's a reason why these people settle. And it's because they know that they do not have the finances to be able to engage with a federal entity who has an unlimited amount of funds for a prolonged legal battle, right? They just don't want to do that, right? Look at what happened with Tom Bilyeu and Impact TV, right? He was trying to create his own NFT. He just settled, right? All of these different entities that have been going to battle with the SEC over the past years, they have just all settled, right? Richard Hart didn't do that. Right? There's absolutely no, even if he was the rumored billionaire, right? There's absolutely no way that you would risk your finances if you could just pay a fee if you knew that you did not have not just a chance at winning, but absolutely flooring them, right? Brendan went over part of his legal team. These guys aren't cheap. Okay, if you've been ranked the #1 litigation team, the law firm in the US of 2023, you're probably not cheap. Okay, and also consider the fact that these firms have a reputation to uphold. If Richard Hart brought them this case and they were like, bro, you don't have a case here, they would have just rejected him most likely. Right? And so you take all of that into consideration, there is absolutely no way that Richard Hart loses this case, right? When you take all of those things into consideration, right? He knows that he has a good case, right? Because otherwise, he's not going to spend an exorbitant amount of finances in order to fight them when everybody else has settled, right? Larger corporations and entities than Richard Hart have chosen to settle out of court just to pay the fine and they could do business as usual, but not him. Okay. And these firms have gone on his side, put their reputations on the line. And so if this doesn't build your confidence within him and within the ecosystem as a whole, I don't think anything will. Right. And Brendan mentioned it earlier. After the dust has settled, there will be no more naysayers because they will not have a ground to stand on, as in zero. Right. All of us who believe in this project and believe in him already know that they don't have a ground to stand on. But like this, like when you win something and it creates legal precedent for the rest of the cryptocurrency market, like if you're still one of the detractors, like it will be verifiable that you are just now a hater, right? And so yeah, man, this like when we found out that he was going to take these guys to court, I mean, look at the price, man. I think we're at 3 zeros and a 1 right now. Look at the price. Yeah, we're at 3 zeros and a 1 in
above
Pulse
SAC, baby, above SAC.
Yeah, today is a big day.
You know?
We've officially recovered SAC price on Pulse, and we're looking at going back to 3 cents on combined Hex price.
Yeah. So
excellent.
Hey, if you guys haven't packed your bags yet, these prices are still pretty damn good. But I mean, there's a reason why we've been kind of ringing the bell for Pulse Chain and Hex and that entire ecosystem, man, because
should have been packing the bags the last 6 months, really. Ever since the SEC dip, that was the time to do it. All right. With that said, we're going to go to the last member of the panel to present tonight. We have Will talking about things going on in the real world. Will, what do you got for us?
All right. So sorry about the headset earlier, but we've got a couple things going on in the real world. Pretty much all of it is the Hex. So I'm looking at like Hex events in real life, and the only thing that's really solid locked on for the first quarter of the year is stuff going on with the Pulse Chain Tour. So if you guys are interested in attending anything in the Pulse Chain Tour, I'm going to go ahead and drop the link in the comments. There we go. That will take you to their website. You guys will be able to look up all the stuff that I'm talking about as I talk about it if you wish, or you can just listen to the smooth, buttery sound of my voice. But on the 27th of January, Saturday, over in Irvine, California, there's going to be a Better Than Bitcoin seminar and after event. You guys can buy tickets, go see that if you're in the California area. I'm not sure exactly where Irvine is, but if I had to guess, I would say it's somewhere within the state. And then next up after that is Saturday, February 17th. Over in Houston, Texas, is going to be a real estate meets crypto seminar. And I'm in the Texan Hex group, which actually, you know what? I'll go ahead and grab the link for that right now. I will throw in the, I want to say it's t.me Hex Texas, but I could be wrong. Oh, it is. Look at that. So I'm going to copy that link, throw that in the channel, and you guys can go join the Texas channel if you're a super cool Texan, or if you just want to see what they're all talking about. But basically what's going to go on is there's going to be a one of the dudes down in Houston. He owns a real estate showroom or something that's in like a corporate building or something like that. And a whole bunch of Hexicans are going to meet up there for Texas. And then it's going to combine with the Pulse Chain Tour. And they're going to do that all on Saturday, February 17th. And again, that's down in Houston. And then early on in March is going to be the Las Vegas portion of the Pulse Chain Tour. They're going to do a 3-day tour over there. I want to say it's March 6th through March 8th. So that's a Wednesday through a Friday. And I'm not exactly sure what all is going on in there, but I know that they're going to go meet up in Vegas, and it's going to be a super cool, good time. And then later on in the summer, I mean, it's not the first quarter, but later on in the summer is the Pulse Chain Tour. So big shout out to Abit Hex in the chat and Hexline for putting on the, if you guys can go, if you want to, you can go to their website too. It's ksb.tv. I will throw that in the chat. right now. But KSB.TV, if you're over in Europe, you can check out their website. They've got meetups, they've got events, they've got seminars, and there's going to be a cruise going on later on in the summer. Pretty much everything going on over in Europe is going to be more of a summertime dealio. They've got some events in June, and then I can't remember. I was looking. Oh man, I was just looking at the chart for when they're doing the tour. I know it's some point in the summer, so you got plenty of time to go check that out over at KSB TV or KSB.TV. So that's pretty much what's all going on in the official Hex meetup stuff. But as usual, I'm rolling around the country. I'm going to be in Texas here probably up until February timeframe, and then after that, I'm headed up to St. Louis and also Iowa. I'm not sure exactly what part of Iowa. It's probably Des Moines. But if you're anywhere on the I-35 corridor, in between Dallas and San Antonio, hit me up and I'll come check it out and meet up and say hi, and we'll grab a beer, throw some axes, or do some cool shit. And then later on in the year, I'll be up in St. Louis and up in Des Moines. That's what's going on in the Hex real life meetups world.
Perfect.
So, yeah.
I got a little extra to tack on to your information there. So for everybody that's been paying attention, we did have the Hex conference this last week, and as part of that, I did get a chance to talk to a Wild SJ as part of organizing the Pulse Chain Tour. There is the potential for actually another event, maybe not Q1, but beginning of Q2. They're looking at doing a Salt Lake City event. So if you're interested in having an event in that area, let a Wild SJ know on Twitter. She'll make that happen. Additionally, the Vegas stuff happening in early March is a pretty cool stop for the Pulse Chain Tour because they are partnering up with Charlie and Miguel and the Crypto Mindset course. Not only are they doing a little like mini course live in Vegas on Friday the 8th, but SJ and RG3 and the rest of the team are putting on like a pitch convention meeting in that morning, which is that if you have a Pulse Chain project or idea that you want to pitch to the crowd, you can reserve a spot and you can have the chance to present your findings to the court and see what they think. So that is what's going on there.
Hell yeah. And I'm checking out the chats right now. I got Dre Sims talking about hit up Waffle Den over in Killeen. Killeen's actually quite close to where my mother lives, so I pass through Killeen all the time. And then Black Meg's over in Killeen. So oh, that's probably where Dre, Dre, I can't remember if you had talked about it on stream before, but I remember you talking about reasons why you would be over near Killeen, probably like the Fort Hood area, if I recall. We got a fellow vet in the chat here. I bet he was stationed over in Fort Hood, but I can't quite remember. But hell yeah, Killeen's a fun place if you're a degenerate military person and you want to go hang out with a whole bunch of army cats. But
fair enough. All right.
Yeah, and
I
got one more thing, and then I'll pass it back to you. The last final thing I'm going to throw in the chat is I already threw the Pulse Chain Tour, so I'll go ahead and throw that in there again. But the last thing that I'm going to throw in here is the link to my Hex Meetup Template thing. So basically, if you guys want to go meet other Hexicans wherever you're at in the country, or if you want other Hexicans to come meet you, then what you do is you click on this link right here, or you type in bit.ly/hex_meetup_template. That will take you to an Excel spreadsheet document that's super duper open to edit for everyone on the internet. You go there, you click on that link, and then there's a whole bunch of different little columns that you fill in. It's got your location, it's got your contact info, it's got communities where people can find you. There's even a little map that shows like what part of the world that you live in, and you can sort of kind of color code your name based on what country or what continent you're in. And essentially all you do is you throw your info in here, so that way other Hexicans can reach out to you and say hi. It's sort of kind of doxing yourself. So just be aware that like if you state like what city you live in or what state you live in, like if people really want to find you, they could probably go through a crazy amount of trouble to look you up. But like realistically, you want to find someone and they exist on the internet, you can pay like $10-$20 for a finder place. So we all live in the digital age anyway. So if you want to meet other Hexicans, then you throw up your location, you throw up your Twitter, your Instagram, your Telegram, your Facebook, even if you want to be an old person like me. And you just reach out to fellow Hexicans. You look for other people in similar places, then you say hi and you sort your own meetups out. I'm not here to like set up crazy big meetups. I'm here to empower you guys to be able to do your own meetups should you want to go meet other people. So that's my favorite thing.
Fantastic. All right. I know we're running slightly over on time, but do we have any last comments closing out the Q1 thesis?
Yeah.
Jay, what you got?
I got one thing since we're already on Hex and Pulse Chain. I'm gonna pull up the Pulse Chain chart real quick, just so you guys can see. If you take a look here, just the Pulse Chain weekly chart, you see how bullish this candle is, right? No resistance. Right. There's a reason. Sorry.
That's a hell of a chart, Jay.
Right? There's a reason why this candle right here went up so fast, because we got no resistance. The last level of resistance, which we're creeping up on right now, is this area of price here at around 3 zeros and a 12.5. Otherwise, all the other weekly candles looks a lot like this one. Not very much resistance on the way up. Okay. And if you can see here, 1, 2, this is Pulse Chain's wave 3. And this is reflected on all the other RH ecosystem tokens. Okay. So yeah, watch out above, because once we break through this level of resistance here, and I think we're going to probably talk about a lot more about this with Access on Wednesday, there's not a lot left. There's not a lot left in terms of what's going to stop the price from shooting all the way up into new all-time high. So let's, I just wanted to leave the folks with that, since we were talking about Richard Hart and Hex and Pulse Chain and so bullish on that. I wanted to give them a little visual, a little taste for what we're gonna see on Wednesday.
Jay, you know what? There's not much left of either. Whales to dump. Everybody has dumped Pulse and Hex for freaking months, and guess who's bought it? Us, the Hexicans, the Pulsicans. We have packed our freaking bags and we are ready to take it off. Perma bears have all sold, mostly, right? Who's coming back into the ecosystem now? The people that are seeing green candles. We see millions of dollars being bridged in Pulse Chain. Millions. Woo! Let's go.
I'll put it this way. I just got in my Twitter feed from Pulse Alerts. They're saying that $14.7 million of Hex from Ethereum just got bridged onto Pulse Chain. So if that's any indication of what's been going on in the market lately, that's it. Yeah, we hit sack price and we didn't bounce off it. We're sitting above it for now by about 10% or so. So we're only going to have to see what happens from here. But I think there's good things to come. Alrighty, with that said, Jay, you were already going. So why don't you start us on the wrap out of here?
Yeah. Hey, absolutely fantastic to be back on here with you guys on the stream, providing value for our community and for everybody else. 2024 is going to be exciting, folks. And I cannot express how grateful I am and how wonderful it is to be able to spend that time here in the cryptocurrency space with this great group of bunch of guys and gals and our community. So as always, thank you so much, folks. For those of you watching us live and for those of you who will be watching us on the replay, thanks for spending a little bit of your Sunday here with us. We know that time is your most valuable asset, and we do appreciate that you spend that time, some of that time here with us. As always, you can find me at _P90Hex on X and agent_J Schroth on Instagram. That's it from me, man, and I'll see you guys back here on Wednesday.
Beautiful. Will, what you got for us?
I've already done pretty much all of my shill. You guys can find me at Linktree /
All right. I guess Will's quitting a little bit early. Brendan, jump in while you can.
He's muted again.
We got a Q1 thesis, right? We're going to have a Q2 thesis. We're going to have a Q3 thesis. What's important is that we're going to continue to bring you alpha. And when it's time to take profits, you're going to be wanting to watch us. You're going to be wanting to be in our Telegram chat. You need to get into our Telegram chat now, because it might not be free forever, but right now it's free. So get into our Telegram chat, get the alpha that we give you on these shows every single day. We're always talking in the chat. People are always bouncing ideas off each other, maybe throwing in a meme coin here and there as a possibility. Nothing's financial advice, of course, but you want to be a part of this community moving forward. And follow me, please, on Twitter at anonymous_bean. And look, Wednesday's stream, it's going to be a lot of information. It's going to be a bit dense, but you aren't going to want to miss it, because you're going to get so much alpha for free that it is going to be out of this world. I mean, freaking Toby Wan, Axis, Boogie, and Jay all in one stream. Holy moly. You're not going to want to miss that.
Fair enough.
Thank you all for
That
watching.
is, yeah, we are very excited about the Wednesday stream coming up. We've been planning this for over a month now, and it's going to be some fantastic stuff. By the way, speaking of the Telegram, if you have not joined the Telegram, we have made it extra easy for you. Do you see that QR code down there in the bottom? Yeah, if you scan that QR code, it will take you directly to our Telegram chat. So go ahead and scan that, get in there, drop a meme or two, and then if you have any questions for anybody on the panel, come check it out. Josh, what you got for us?
Yeah, so I'm Josh. You guys can find me on Twitter, on Instagram at Chocolate Taints. That is my handle moniker on those platforms. Looking forward to Wednesday, man. You know, Axis and Toby Wan and Boogie, from the minute that I messaged them about setting this thing up, they were on board for it. They were like, yeah, dude, let's do it. This sounds amazing. So, you know, Jay packed a lot of information today, but make sure if you guys are going to be showing up, and we hope everyone shows up and shows out for that stream on Wednesday. It's going to be a mega stream, so make sure you guys show up for that. I know as far as behind the scenes stuff, we have a meeting tomorrow. We're finalizing a couple different things with the, you know, what we're going to be doing moving forward with the channel. So might have a couple big surprises coming up around the corner. And then getting special guests lined up, the Whiskey Wednesday streams, and our regular Sunday show. You know, 2023 was the year that we were born, but 2024 is going to be the year that we explode. So I'm looking forward to it. I know all you guys are looking forward to it. And yeah, everyone in the chats, you know, you guys come every single episode. You guys bring great comments, great conversation, and yeah, it's just so awesome for you guys to be a part of it. Again, make sure you guys join our Telegram, take a picture of that, use that QR code right there. Make sure you guys like, comment, subscribe on the video, share it across all your URLs. And Zenith, great job hosting tonight, man. And panel, thank you guys so much for your information. So Zenith, go. Yeah, Zenith,
I just want to say
go
this
ahead.
stream was so much fun. You guys brought so much freaking alpha for a free show, and you get the same alpha in the Telegram. So why aren't you in there if you're not?
That's right. Z, take it away, bud.
Will do. So speaking of all the alpha in the Telegram, like we've talked about previously, we're putting together an actual PDF document to put together all of our thoughts on paper and release it to you guys. So if you want to get your hands on that, my goal is to get that out by Wednesday so that we have our document out and we're ready for the Mega TA stream. Additionally, if you joined us this last Friday, you know that we covered The Millionaire Next Door on Book Club. We are looking for our next book to do for Book Club. I have posted a poll in the Telegram chat. Right now, we have 3 options that we are considering. It is 7 Habits of Highly Effective People, How to Win Friends and Influence People, or Think and Grow Rich. Get in there, go ahead and cast your vote, and we will go with whichever one of those comes out on top. Outside of that, I am Zenith as always. You can find me on Twitter at Hex Space Force and YouTube and Instagram at Hexaco Space Force. Brennan has one last thing before we get out of here. What's that?
Yeah, we just saw a $400,000 buy order on Pulse Chain. So we just saw a $405,000 Pulse Chain purchase. We are going to continue to pump. Let's go.
Absolutely. I guess a little bit of a final prediction for Q1 2024 is I would not be surprised if this is the actual time where people officially declare the bull market on, especially considering we just got the Bitcoin ETF, and there's even talk about the Ethereum ETF happening later in this month because that's when BlackRock's first deadline is coming up. With that being said, halving is coming up in the future, and it's an election year, so it's going to get wild. That being said, thank you for tuning in. You guys truly are the ones that have stuck it through the bear market if you're here. So we're ready for only good things to come, and we got tons of even better things to come on the channel. As always, thank you for your time. We will catch you guys next time.